today we'll see what is happening in the market, like S&P 500. If you see S&P was up by 0.82%, when 5 days is like not given in return, 1 month also 1.67, and in 6 months 12% YTD 28, and in a year it's 31%. It's very good return. Now what is going to happen if you see the what is happening that day, like the Dow Jones was down, where the S&P was up, even the dollar index was down. So because the dollar index was down, it is helping gold, because both intersect with each other. So gold is going up, even the VIX is going up. So VIX is indicating that whenever the VIX goes up, there is a more chance the market is going to fall from here. If you see, these are the more attractive stocks: Nvidia, Apple, Amazon, and Coca-Cola, and more of the more attractive stocks currently. And the top winner is like the IT, because IT has given a good return that day, 1.5%. Around there was a jump in the IT sector. So due to that, these Nvidia, and, Amazon, Salesforce, and all IT stocks have given good return. Where the Nike, if you keep Nike in your watch list, where if you see the losers, like these are the sector, like health sector, not given return in last 3 months, and that is the main issue with these all sectors. If you see what is going to happen in the next session, so if you see 1.16, 0.16 is there is a future, S&P future is down. So more of a chances that market will definitely going to be in a downtrend in coming session. More of the chances that if you see the sector wise, so communication given 3%, where IT has 1.52, and the negative is like healthcare. Healthcare from the 3 months are not given any good return. 8.3 is a minus, where YTD also very pure return. Where if you see 45% return, IT is 37, 36% finance is like finance. You have Bank of America and all, and given 31%. Even the S&P and 500 given a return 27% after that. Where these other sectors are not hardly any given return, real estate and all. Where if you see the valuation wise, there is a buffer indicator. If you see this indicator is illustrating that it is currently at 209, 208, currently 209. It's overvalued. So if you're able to understand this chart, if you see last 1 5 years trend, it is like the blue line intersected here. It goes down. Total, if you see the total market cap, GDP, asset of Fed current, so it's currently it started with 20 around 147, and then it came to 103, and this if you total the GDP and TMC, where it started with 194 and it goes down to 137. So whenever it comes down, there's some correction in the market, and the market get fair value out of that. But currently, this all-time high last 5 years and 10 years also is all-time high. So there was a one chance in 2022 October 30, there was a market was in a good correction, and at that time, if you have put your money, you would have made a good gain out of that. So currently, my interpretation, my observation is that market is too high, and if you're investing right now, I would be telling you should book profit. It's not for the long-term investment currently. The market is indicating that. Where if you see the P ratio of the market, again, the other matrix I'm sharing with you, you see the P ratios of market, where the P is like in last 5 years, it was like all-time high after COVID. There was a good correction in the market, and P was down around 18, and it goes up to like market was double down like 39 P. Again, there was a correction. Is a broke is all like 50 days and 100 days and 200 moving average is came to around 19. Again, there was a correction in the market, and the valuation was good. Again, currently the P is all-time high, and if you want to invest, you need to be understanding that whenever the P ratio comes to around 200 moving average, or at least below the 100 moving average, there is a correction in the market, and you should be investing in that correction. So that's for now. Like for P ratio also, if you 10 years P also, if you see, so in 10 years also, only one time it was very high after COVID. There was a big boom in the market. Rest is all time high, and the correction is coming up. I'm expecting a correction around 15-20% in the market. So if you're investing, be cautious. Like what is going to happen. So next we'll see about what is happening in the technical chart of this. So if technically it's indicating that again the market is going up. So this is the if you see this line, this is a line where a market could able to reach 6,100. Once market will cross 6,100, definitely it will be in a flow to achieve 6,200. If you able to see the VIX, what is indicating? VIX is indicating that market in a different mood. Like VIX was up again, it down again going up. So the next session it could be if VIX will going to up. Like if I'm going to show you one box. this box I'm going to share with you. So if VIX is going to cross 14.24 and go beyond, and this is this is 200 days moving average 15.8, they could be a market fall. So next session for as per the future is indicated that market is going to fall, and we have to watch the VIX. If VIX is going to cross 14.24, then time will have there will be a market fall. So you should be cautious about the market. So that's for today. For my observation, that market could able to win a mixed sentiments. Market could fall in next session and all. Thank you for watching my channel. If you're more interested in learning about more about what is happening in the market, I'm going to share with you everything. Thank you for watching and do subscribe. Thank you.